Most investors don't lose money because they're dumb. They lose it because they ignore the signs. We're talking about 6 signals that appear almost every single time before a stock collapses. And today, we're going to reveal them one by one. And then I'll show you how to build a model that flashes those warnings before you get burned. Let's start with the story of what was at the time a very promising company. We're talking about Beyond Meat. At the peak, it felt inevitable. Plants were the future. But under the buzz, the numbers began to whisper and tell a different story. Growth slowed, margins cracked, costs climbed. If you knew exactly what to watch for, you could have sidestepped the pain. Let's break down the 6 red flags that you must watch for and build your early warning system together. Red flag number 1. Slowing revenue growth. You see, markets pay for acceleration and they punish deceleration. With Beyond Meat, early hypergrowth faded into just single-digit growth, and while the company's promotions grew, demand and momentum didn't. Red flag number 2 is margin compression, and this can happen with gross margins and net income margins. Great products typically have phenomenal pricing power, which means that the company can increase the prices without bad repercussions. However, when pricing power slips, the margins can begin to bleed. And in the case of Beyond Meat, the input cost, the discounting, and the retailer pressure squeeze their margins hard. And as you can imagine, the stock followed. Margins don't lie. Red flag number 3, rising operating costs. This happens when a company has operating expenses that just won't slow down. And when the growth cools down, but the selling, general, and administrative expenses, as well as the research and development costs, keep climbing, that is a fire alarm. And it means that the story needs more spend to be still and solid. The 4th red flag is debt expansion. When momentum fades, companies reach for leverage. And generally, debt is fine, as long as, of course, you have the free cash flow to cover it and pay it off. However, when it starts to get out of control, this makes the company fragile. And this is particularly important to watch when the company's debt grows faster than their cash generation. Red flag number 5, dilution. Number 5 is actually quite sneaky because it's something you generally would not consider to be a bad thing intuitively. But this happens when the companies issue more shares to finance their operations. As the number of company shares increases, you still have the same pie, and your slice gets thinner every quarter. And at the end of the day, you can't build wealth in a company that keeps selling more of itself. And the final red flag, number 6, weak guidance and channel stress. This happens when management lowers expectations for investors, or when retailers reset shelf space if the company works in that industry. What happens is the analysts quickly get the news, confidence fades, and the stock price begins to drop. To avoid these 6 red flags, there's a way in which you can do it automatically directly from your spreadsheet. And this is this template that we've created where you simply type in the company, and using these functions that allow you to pull in data directly from Y-sheets, this allows you to spot the 6 red flags immediately. So as you can see, in the case of Beyond Meat, in this year right here, this is when things really started to go south for the company. And the beauty of this is that for any company that you hold, you can just simply change the ticker and all of the data will automatically update for you. And then you will be able to use this system to spot any red flags before they happen, to protect your portfolio. The link to this template will be in the description. Just make sure to check out whitesheets.io to have an account and to have the add-on installed so that you can get the data automatically. Now you know exactly what the 6 red flags are, and you've seen them in an example company, which in this case is Beyond Meat. You've seen how they emerge quietly before the fall. The question is, will you catch them the next time? Let me know in the comments and I'll see you in the next one.